All right, I've got the February 2024 Edmonton housing market update for you. We're going to be looking at the whole market, including total residential, half duplexes, detached homes, townhouses, and apartment condos. And for each one of those market segments, we're going to look at what's happening with prices, if they're balanced, buyers markets, sellers markets, that kind of thing. And also we're going to be looking at how benchmark prices have been trending over time, including all the way back to when they first started the home price index. So let's jump right in. All right, let's look at the market as a whole. So this is total residential. It includes all property types, including detached homes, townhouses, duplexes, and apartments. So think about this section as sort of like an overall picture of how the market's performing. So the absorption rate has bumped up to 34.18%, which is an increase from last month when it was at 27.66%. So now we're starting to get into the middle of a balanced market. Shows that we're starting to pick up a little bit as we get closer to the spring market. The average price for Edmonton across the board was sitting at $380,824. At the end of the month in January, there was 3,095 active listings, and there had been 1,058 sales. So the number of active listings were down 3.58% from December and down 18.8% from January of last year. And the sales were up 19.14% from December and up 51.36% from January of last year. So you can see there was definitely a pretty big uptick in sales going from December to January. And if you compare that to last January, there was a lot more sales. If you look here at the 13-month history, you can see there was just under 700 sales in January versus 1,058 in January of 2024. So pretty big uptick in sales. Plus there was less inventory than there was last year. Last year they had 3,800. Whereas we've got just over 3,000. So that's a pretty big difference in the balance of the market, showing that things are already getting more competitive in the Edmonton market compared to where they were at last year. Average days on market was sitting at 59 versus 51 days in December and 65 days in January. This will continue to adjust as we get further into the spring market. And here you can see the market distribution by price. You got 19.57% under 200K, 14.7% between 2 and 300K, 21.27% between 3 and 400K, and 25.5% between 4 and 500K. That's the biggest segment of the market overall. And then between 5 and 600K, you've got 11.53% of the market and 4.7% between 6 and 700,000. Then there's just over 2%, 2.1% between 7 and 800,000. And less than 1% between 8 and 900,000. As part of reviewing the market for total residential, we're going to look at the composite benchmark price, which again is sort of looking at the market as a whole. They do have a specific description of what the composite property description is, but we're going to use this for basically tracking changes in value. Last time in last month's video, I just looked at the last 10 years, but this time I thought I would show you the data going back all the way to 2005, where they've collected this for the home price index. So you can see exactly how it's performed in the last, I guess, 20 years, you could say. So right now, the composite benchmark price is sitting at $367,900 for the city of Edmonton. And you can see when they started tracking it in 2005, it was sitting at $166,600. Prices started to go up in 2005 and it went pretty crazy in 2006, peaking in June 2007 at $358,800. And then you could see that we've had quite a bit of sideways action since then. There was definitely a dip after 2007, bottomed out in March 2009 at 271,000. After that, like, we have been gradually going up from then, but not like up and steep to the right like what you've seen in some other markets. Some people are expecting what happened between 2005 and 2007 to happen again in Edmonton, especially since we do have that affordability advantage right now, but I wouldn't automatically assume that's what's going to happen. I would really do your research if you're betting on that. Make sure that you know what you're talking about, I guess. So that's it for the composite benchmark price. All right, detached market. The detached market was sitting at an absorption rate of 35.34%. also putting it in balanced market territory. This is a substantial uptick from where it was at last month. Last month it was at just over 25%. So it was actually a buyer's market technically. So now we're moving into balanced market territory, and I would basically say that's because sales have picked up and inventory hasn't kept pace with it. The average price for detached homes was sitting at $473,869. At the end of the month in January, there was 1,695 active listings and there had been 599 sales. So the number of listings was down 7.33% from December and down 27.44% from January of last year, showing that that same sort of trend and difference from last year has been continuing. And this has been going on for a while, where we seem to consistently be 20 to 25 to 30% below inventory levels from last year. Sales were up 27.72% from December, so obviously not a huge surprise there. Going from December into January, things usually pick up in January, since December's typically the slowest, if not one of the slowest months of the year. But sales are also up 54.78% from January 2023. So that's a much bigger switch. So the inventory is still down, but the sales are substantially higher than they were in January of last year. So that's why we're seeing such a big difference in the balance of the market. Things are definitely getting more competitive out there. Average days on market was sitting at 59 days versus 52 days in December. So even though that's up higher, I think the change in the balance of the market is the bigger story there. And you can see last year was at 64 days. Now, in terms of the market distribution, you got 1.67% under 200K, just over 8% between 2 and 300K, 23.2% between 3 and 400K, and the biggest segment between 4 and 500K at 32.55% by a pretty decent margin. And then you've got 18.86% between 5 and 600K, just over 8% between 6 and 700K, and 3.67% between 7 and 800K. Then in the more the high roller category, got 1.5% between 8 and 900K and 1% between 900K and $1 million. From there, pretty small numbers. That's the market distribution for detached homes. All right, now looking at the benchmark price for detached homes, we've got two different categories: 2-story homes and 1-story homes, which would be like bi-levels and bungalows. Similar pattern to what we saw in the composite benchmark price. In January 2024, 2-story homes had a benchmark value of $482,600, and 1-story homes had a value of $375,400. Again, going back all the way to the beginning in January 2005, 2-story homes benchmark price was $234,500, and 1-story homes were $178,300. We had the same run up in values as we did for the composite, peaking in June 2007 at $479,000 for 2-story homes and $382,400 for 1-story homes. Again, those prices dropped after that and sort of bottomed out in March 2009 at $369,300 for 2-story homes and $289,000 for 1-story homes. Again, very similar sort of rocky road after that. It is still gradually trending up since then, but nothing too crazy like what some people are used to seeing in Vancouver and Toronto. There you have it. That's how the benchmark pricing for detached home has performed in Edmonton since January 2005. All right, let's look at semi-detached homes. So this is mostly going to include half duplexes. The absorption rate was sitting at 42.92%. So that's also inched up a little bit higher than before. Last month it was sitting at 35%. So that's been increasing as well, inching its way closer to a seller's market. Average price was sitting at $385,083. And there was 233 active listings at the end of the month and 100 sales. So the active listings are down 12.73% from December. Don't have the data from last year. And the sales are up 5.26% from December and up 47% from January of last year. So pretty big increases there. Average days on market was sitting at 51 days versus 39 days last month. Even though the average days on market's up, the other data shows us that this market is performing better. In terms of the market distribution, you had 3% under 200,000, 17% between 2 and 300,000, 30% between 3 and 400,000, and 42% between 4 and 500,000. After that, it drops off a cliff with 6% between 5 and 600,000 and 1% between 6 and 700,000. Same thing with 7 to 800,000, with just 1% there as well. Now looking over at row and townhouses, this should include mostly townhouse condos, but it also should include residential attached properties, which are a lot like a townhouse, just single family titled. The absorption rate was sitting at 45.11%, more than halfway through a balanced market. It's up a little bit from last month when we were at 42%, but not a huge change. Average price was sitting at $269,463. Active listings at the end of the month was 348 with 157 sales. So the listings were down 2.52% from December, and the sales were up 4.67% from December and over 30% from January of last year. Average days on market was sitting at 54 days, with the average being 48 days last month. One thing that could kind of contribute, we're seeing a bit of a pattern here where the average days on market's higher in January than it was in December. I wouldn't be surprised if some of those days that got racked up on these listings was in December and they didn't sell until January. So they had a slow period. Both those months tend to be a bit slower. So it's not unusual for me to see higher days on market for properties that actually sell at that time because they're coming out of a seasonally slow period. Now the market distribution here is a little different. Under 200,000 is 32.48% of the market, actual biggest segment that month. And between 2 and 300,000, you got 28.66%. and 31.21% between 3 and 400,000. So all three of those segments between under 200K, 2 to 300K, and 3 to 400K are all, pretty close to a third of the market if you're just roughly looking at it. Once you get to 4 to 500K, it's 5.73% of the market, sort of like a luxury townhouse condo, or much bigger than average would be what you would see there. And 1.27% between 5 and 600K. All right, let's look at the townhouse benchmark price. That was at $233,100 in January 2024. And if we go all the way back to January 2005, it was sitting at $113,300. It peaked in June 2007 at $270,500, and again bottomed out in March 2009 at $198,000. Very sort of similar trajectory as the rest of the Edmonton market, on its way to the current day and age. All right, now let's get into the outlier market, which is the apartment condos. They're sitting at an absorption rate of 21.22%. Only market segment still in a buyer's market, although it has improved from December. December, the absorption rate was 17.58%, so it is a substantial increase from December, more than likely driven mostly by sales, but we'll see as we get further. Average price for apartment condos was sitting at $189,357. Active at the end of the month, there was 952 active listings, and there had been 202 sales. So the active listings are down 3.84% from December and down 33.9% from January of last year. And the sales are up 16.09% from December and up over 60% from January 2023. So that is a pretty big shift, seeing that there's quite a bit less inventory than there was same month last year, and not quite double the sales, but 60% more. So definitely seeing some improvement in activity in the apartment condo market, although it is still a buyer's market. There's still a lot of inventory out there, and I know there's more inventory that would come on if prices were more favorable to sellers. Average days on market sitting at 67 days versus 58 days in December and 81 days January of last year. So it is an improvement from last year. Most of those are under 200,000, with 70.79% of those sales under 200,000 and 22.77% between 2 and 300,000. Then a small segment of 3.47% between 3 and 400,000 and 1.49% between 4 and 500,000. All right, let's talk benchmark prices for apartment condos. Currently in January 2024, the benchmark price is sitting at $175,200. If you look at the beginning of the chart, it looked similar to what it did on the other ones. January 2005, the value was sitting at $106,600, peaked in June 2007 at $244,300. So you'll notice we're still below the peak in apartment condos. It dropped and stopped dropping in March 2009 at $180,300 and made some upward gains that sort of peaked around March 2015. But apartment condos have been on a downward trend in Edmonton in terms of price since March of 2015 to where we're at today. That has led to some feeling that apartment condos are undervalued in Edmonton, and that inevitably the cycle will come around and they'll get their time to shine again, which is certainly a possibility. I tend to focus mostly on the current market conditions, and we are seeing some shifts in the apartment condo market, but it would have to shift substantially in order for this to reverse and start going the other direction. But it doesn't take much. All it takes is an influx of buyers and not the same amount of listing activity, and we could see the trend reverse, and we could start to see some price appreciation for apartment condos in Edmonton. Certainly one of the best priced markets for apartment condos here in Edmonton. If you'd like to get help and support on your home buying or selling journey in the Edmonton market, then the best way to get started is to actually reach out to me by going to booktrevornow.com, and you can set up your free consultation call. You can ask me anything you want about buying or selling, and I'm there just to help you on your journey, whether you're looking at buying or selling in the next few months, or even if you're not planning on doing anything for the next year. You can also reach me directly on my cell at 780-819-5508. Just shoot me a text or give me a call.